Good afternoon. Today is Wednesday, the 26th of November, 2008, and this is Brian Shannon from AlphaTrends.net. We had a real bullish day once again here today. The NASDAQ 100 finished with a gain of $1.18 or 4.19%. It did get off to a shaky start, but held above the key levels that we've been looking at down here at 2750. And of course, if we back this up to from the 5-minute time frame to a 10-minute time frame, the more important level, of course, was that 2730. So we took out the 2730 on Monday of this week. Had some follow through, some consolidation yesterday that held on very nicely, and today we got off to a shaky start, but the market quickly recaptured not only the daily VWAP here on the 1-minute time frame and showed that the buyers were using that as an opportunity to come in, but also the 2-day VWAP. Now on the daily time frame, you're going to see that we see this rally coming on diminishing volume. Each day the volume is declining, and I've been getting emails about that, and I'll say what I consistently say, which is it's a reason to be concerned about the longevity of this rally, but it doesn't mean that you can't trade it to the upside or that you should be selling it short. The only thing that pays is price, and if you're fighting a 4% rally in the Qs, then it just doesn't make sense basically, because the trend was higher highs and higher lows pretty much all day. Very brief little pullback in here, but it held above that daily rising VWAP all day long, and on a bigger picture from the 10-minute time frame, it was able to get past the well, here's what we've been looking at, is this inverted head and shoulders pattern. In fact, the pullback this afternoon came right to that neckline. So we broke past the neckline of this inverted head and shoulders pattern. Here's the left shoulder, the right shoulder, or the head, and here's the right shoulder. We broke past that, and we did so on light volume, but we tested it and it held. The important thing is that prices held, because again, only price pays. So if we look at the height of this pattern, about 3.5 points, it would suggest a rally up towards 3.5 points higher from here, or $32 a share. But as I was saying yesterday, that's pretty far away. Looking at the 30-minute time frame, we saw the downtrend line break. We've got the head and shoulders pattern here. We've got this higher low. This is going to continue to be very important. We've got a rising 5-day moving average, so the buyers are clearly in control. It's getting extended, of course, and we are in a primary downtrend. And even though for the week the Qs, for the first 3 days of this week, the Qs were up 10%. For the month of November, though, they were still down 10.7%. We're still in a downtrend. This is a rally within a downtrend. Perhaps it gets up to that 50-day moving average. Perhaps it gets up to the VWAP since this market broke down here in October near about 31.5. Or we've also been looking at the Fibonacci levels as potential levels where sellers may come to this market. It initially halted at 38.2%. We're making a run for the 50% level. Bottom line is, no one can guess exactly how high this will go. What we have to do is continue to monitor the shorter term time frames and look for evidence that the sellers are gaining control or the buyers just aren't there. And right now we're going to see that this level is going to be important, again, because it's the neckline of this inverted head and shoulders pattern that was tested here, and it also represents the higher low. So about 2850 down to 2830. Next level below that is 2750. That's going to have added significance because it's where we see that rising 5-day moving average as well. So we've got again, we've seen since late Friday, that this market came up on that big volume. We saw we've seen the volume diminishing in here, and that's reason for concern, but only price pays. So listen to price action. That's where that's what pays you basically. Let's take a look at oil. Oil had a big day, up 7% today. It got very volatile in there. Let's take a look at the 1-minute time frame. I'll show you what I mean. Initially, we had a little bit of strength. It did gap higher. Taking a look at the 2-day chart, you can see it gapped higher. Now back to the 1-day. Kind of chopped around in here. I think we had some data. I don't know what that was, but it broke down super hard, and then a huge rally, real choppy in here, but closed right up near the days. Volatility tends to peak near turning points. We're seeing a lot of volatility in here. If we look at that 30-minute time frame, again, this is a level that I was pointing to the last couple days. If it can get above above this level in here, 45.5 or so, then perhaps it's going to make a more sustained rally. We've got this higher low in here. I still think, again, that DXO is your best way to play that. This is basically, you can look at it as a long-term call option on oil. But back to USO, we've got still on the daily time frame a very clear downtrend, but unlike the NASDAQ, we're getting big volume here on this reversal. That big volume and that big volatility. Big volume and volatility mean there's a lot of emotion, and that typically comes at turning points, at least short-term turning points. It's way too early to call this thing a bottom. A bottom or the bottom is a process like we saw in here. We need these longer-term moving averages to flatten out and then begin to move higher, and that's going to take some time, not only for the USO but for all these markets. The Russell 2000 was up $2.65 today, or about 6%. For the week it was up 15%. For the month of November, down 13%. Just crazy numbers. These are numbers that usually take, obviously, months to be attained. It's gonna be a pretty boring market when it slows back down again. But here we've got, the important lows that were broken down have definitively been taken out here with today's move. It closed right up at the highs of the day. Taking a look at the 30-minute time frame, this downtrend line was clearly taken out today, as well as making this higher high. This level here will be important. It's about $44.30, and just below that is probably this level in here from about $45 a share. 45 to 45.30 is basically this low right in here. So 45 to 45.30. It would be nice to see a pullback, a deeper pullback in this market, but it's encouraging to see that these higher highs and higher lows in here. I'm going to post a chart at some point from the 1932 lows. The Dow Jones Industrial Average in 27 days rallied 75%. I'm not suggesting that's what's going to happen here, but we have to be open to any potential scenario. It doesn't mean that I think we've made the bottom. We'll only know that well after the fact, but meanwhile, these rallies are just terrific to trade, and hopefully you looked at some of those trades on the stock twits today, because there were some massive winners that I was talking about in there. The semiconductors, we were looking at these yesterday, and I said that I would have preferred the rest of the market to kind of do what it did, which was to pull back to its 5-day moving average, and that perhaps this was poised for a move up towards $17 a share. That $17 level comes from the daily time frame, basically right here. We got just below that here today, and this market opened weaker too, but right to that 5-day moving average. It didn't take out yesterday's lows, and then began to rally almost immediately, finishing right up at the highs of the day. Again, the way that I prefer to play the semiconductors is this USD, which is the double long ETF for that. So you're going to get twice the movement. So it was up 12.7% versus the SMH, which was up 6% today. So a lot of opportunity in there, but we're going to use these leverage funds. Just trade half the share size. You don't have to lever your whole account up and be blinded by the upside opportunity. There's a lot of risk in doing that. Same type of patterns here. What do you and I get emails saying, would you call that a running cup and handle? Would you call it an ascending triangle? Would you call it this? Forget about what you call them. The fact is, the important thing to look at is not to identify and put a label on it, except the only label that you need to know is bullish, because when it breaks past a level of resistance, here we see the buyers have been getting more aggressive price-wise. The buyers have been getting more aggressive time-wise, as it takes less time between these tests, and it was just building for a push past that 1650 level, which we saw completed right up towards that $17 level. 17 was also the approximate location of the daily R2 in there as well. For the week, the semis were up 11%. For the month of November, they're down 18%. So we're still getting, we still have to look at these as bear market rallies, but obviously the bear market rallies can be highly profitable. Financials were up another 4.6% today. This group for the week was up 27.5%. For the month of November, though, unbelievably, they were down 20.5%. So we've still got a lot of damage in here and a lot of people still hurting. Hopefully you're not one of them because you've been trading these markets. But if we look at Fibonacci in here from the election highs, we've seen that we're a little bit past the 38.2%, heading up towards that 50% retracement level. And on the daily time frame, we've got to look at this 13 area as a potentially important level that may be defended by the sellers. So we're getting a little bit extended in here, and maybe it's just time to ease back a little bit and make sure that you have a strategy for protecting any gains that you have, because we've seen how many times have people called the bottom in the financials, in the S&P or whatever. There's just a lot of uncertainty still left in this market, which is why it continues to be a trading market and a heck of a trading market. The S&P 500 Monday, recaptured the breakdown lows here, and I was talking last Friday, was this possibly setting up a bear trap? It looks like that bear trap has been sprung, and that's why we're getting such a large rally, up more than 20% from those lows that we had seen in there. For the week, the S&P 500 is up 12%. For the month, it was down 8%. So not as bad on the monthly time frame as some of these other markets, but still clearly, obviously, on the weekly time frame, we've got these lower highs and lower lows, but we're getting a nice rally off of them, and that's what matters. It's not what happened 6 months ago, but what's happening right now and how can we make money from it. So we've got an important low here that was made yesterday at about 83.75. Getting holding above that is going to be important. We've got the 5-day moving average also rallying up through there as well. If we take a look at the Fibonacci level, the 2/3 retracement off of the election highs, we're right here at about $91 a share. And if you look at if you take a look in just horizontal line here, we've got the potential for a little more resistance up near this 92, and then right here at about 96, and bigger level obviously is up near 100. The volume weighted average price since the sharp breakdown right here on October 6th has been about $91.27. So perhaps that's an area this market can continue to rally up towards, and that's also coincident with the 2/3 retracement at about 91. So it's getting extended here. There's been some great trades. There will continue to be great trades, and hopefully you're getting a nice part of them. Hope everyone has a nice holiday and enjoys the day off tomorrow.